What's up, guys? Welcome to my weekend watch list update for the weekend of February 22nd. I got a long list of about 11 stocks for you guys today. It's pretty much going to be all these starting at with Palantir going all the way down. Just starting off with Palantir. Palantir has been, it's been steadily moving up. It had a pretty good earnings report, but it actually got, a really big sell-off after earnings. That left a gap wide open. However, a lot of this price was actually picked up after a report that ARK, Kathy Wood, had bought back into the stock. And because of that, even though the next day it gapped down, after hours it was able to climb. In the morning it gapped up all the way here, and throughout the day it climbed, and even after hours it's been climbing. It closed around 29.75. Very, very bullish sentiment. This is a stock that is running a lot on momentum. It's staying within this channel. This setup right here, the gap down followed by the gap up, closing above this right here, is actually very, very bullish. Very bullish sign. It's a bullish setup, and like I said, it's a momentum stock. I like this stock, to run all the way up to 30, about 30.44, which is the low here. If it manages to crack above this, the next resistance I would expect to see would be the bottom right here, which is the gap left open from the day prior. What I would do is, if you got in your position here, consider taking some profits here, unless it breaks straight through. Because if it breaks straight through, it's going to run to the next level, which would be around 31.30. And if it breaks this, it's pretty much going to go around 38 or so. One thing to notice too is that this stock has always respected the 20 EMA. This orange line right here is your 20 EMA. As you can see, it's bounced here. It almost bounced here. It bounced here. It bounced around here. This stock has consistently respected the 20 EMA, so you can expect this to possibly be resistance. And if you give it about a day or two, this 20 EMA, which is about 30.81, is going to drop down to about the 30.44 level. And when both those indicators fall at the same price, you might see some resistance on its first go. But like I said, if it manages to break through that, you could try buying a couple calls and swinging it. Or if you're already in on shares, you might consider taking some profit. If on the first bounce, you get a strong rejection away. That's just what we're looking at from right now. The next one we got going on is IPOE. IPOE is a SPAC. It's supposed to merge with SoFi coming up. As of right now, this has been one of those stocks that has not closed below the 20 EMA. So it is still in a strong bullish up move. But a lot of times what these do is, these end up doing what you call a bull flag pattern. So what you get is you get a big move up, and then you kind of get an area of consolidation before its next, leg higher. In this case, why this happens is because you need the stock to trade sideways, allowing the moving averages to catch up. And then once the moving average catches up, it's ready for its next leg up. And that's exactly what it's doing right here, is that it's, it did its next big leg up in the market. And what's going on now is, it's consolidating. It's letting the moving averages catch up. And then once it decides to make its next move up, it's going to go up much higher. I like this stock because, one, I could actually see SoFi being as a long-term investment. So this is one of those where it's like, if you don't want to swing it, you don't have to. You can actually just buy it. I would actually buy it at its current price, which is around this 22.50 level. It's where the 20 moving average is at. I'm actually in a small position here. I think I might hold this long term, depending on how the market's looking, a week, 2 weeks, a month from now. But if it manages to break through this and it doesn't, and it breaks through this resistance right here, I mean, this support at 21.74, which is the low of this candle, you can expect this to run down to possibly the next EMA, which would be the 50 EMA. And this 50 EMA is converging, pretty good with the close of this candle. the support that was here as well as the support here. So, you know, if come Monday you see a huge gap down for whatever reason, you might want to look to buy around this range. So next one I'm looking at is CMLF. This is one of the ones that was also added by ARK and by Kathy. This one I don't know what to make of it, other than the fact that I found a few levels to possibly buy in. It looks like there's some support here, but I would feel much more comfortably buying in maybe like around the 1896. Why? Because in a couple of days, this EMA is going to catch up to around this level. And that level combined with, the support that is here would make for a very strong buying opportunity. I don't know if I would buy this for a long-term hold, but I mean, if Kathy Wood's buying it long-term, it's probably for a reason. If not, you can try buying maybe around this level, which is, another low. I actually went back, about a couple days to see, what was going on with this stock. And actually, let me go back and take a look at what happened here. So this was on the 11th. So we take a look at the 11th and the 10th. Let me see. Let's take a look at the price action on the 11th and the 10th. So this right here was the 12th. Let's give it about 2 more days. The 11th and the 12th. Yeah. So some things that I was looking at here was, I saw this level. This was obviously the low of the day. The next day, it looks like this was a level that I was having trouble going across. So that's kind of why I put this 2275, 2277 buy region. Or if you really want to start a position because you want to go long, you can also try opening a position around the 22. Oh, that's the one I said, 2274. Yeah, 2077 is the low of day. And this level that it had trouble getting above has now been support for this day and then for this day. So now going on to the next one, ABML. This has been running since it broke out above this day on the 20th, and it actually increased on a lot of volume, and it managed to decrease on small volume. And for right now, it's just been chopping sideways, again making that bull flag pattern where it runs up and then consolidates, lets the moving averages catch up. And it looks like this one has actually been respecting the 20 moving average, which is this green line right here. It looks like you got a support here. It looks like you also got a support on this day. But it looks like when it opened here on this day, as soon as it broke through, it pretty much gave out. Now, it did find support at this level at the 281. But I don't know if I would, I don't know if I would buy it at the 281. I would probably wait for it to come closer to the 20 moving average. If you give this about 4 to 5 days, this 241.50 EMA should come to about the 252. And then when this moving average and this support line converge, you should see a strong support. You should get a strong buy signal. When those two numbers merge. So this could be your first buy, and if you don't like that, then it can be this one. Next one, I've been pretty long on this stock for a while now. Corsair, they actually had pretty good earnings. They were trading within channel, and then one day they just randomly ripped higher. They got sucked back in, and then we just started trading sideways again. And then they broke out. Next day you just got a big gap up. And then the SPY was getting choppy on some of these days. That's why I got pulled back down. This is one of those stocks that has been respecting a lot the 50 moving averages. So right here you see a small bounce. Right here you get another bounce, and it's pretty much been trading on this line for a while. This is one of those things where it's just trading sideways. It's consolidating because it's about to break out. Where would I buy? I would actually buy here, and I would actually look to swing this for a couple weeks, maybe a month. Now, one thing, like one reason why I wouldn't necessarily do calls here, I would do calls on the breakout, but one reason why I wouldn't do calls here, because if you take a look at, for example, February 19th, if you take a look at, all the way to December 1st, November 30th, it hasn't really moved in price. It's actually been at the very same price level. Yeah, you have gotten a lot of that fluctuation, but you haven't necessarily seen like a big enough move to justify, you know, the time burn that you get. So this I would buy shares, hold long, or you can try buying on the breakout. I would buy the 40-40 breakout. To me, this is a very strong line. This was a line that I signaled a couple weeks back, and it looks like, you know, even as recent as a week ago, you know, served as very strong support for this day, because it came all the way here and it got sucked all the way back here. So it was about a 5% swing from that. Um, and yeah, so we'll be looking at that. The next one I got in was VGAC's Virgin Galactic Acquisition Corp, was another SPAC. This one I opened up a position at $13. Why? Because it was actually at the 50 moving average. This is partly a swing, partly a long-term hold. What would I do in this instance? What I would do is, let's say you buy 200 shares here, right? Once it gets a big enough bounce to like the 13, if you're still not sure whether you want to hold this long term, you can get rid of half your position. And so you can have 100 shares that you're going to hold for a long time. You can have 100 shares that you pretty much just swing, you know, for, let's see, it's about about a $2 gain. So about $200. Now, why do I like this? Why do I like this price? Because there's actually not much risk with the SPAC in the price that the lowest it can really go to is about $10, right? So assuming you're aiming to get out maybe like around 17 and looking to get out around 10, that's a risk reward of about $7 to 3, and that's a pretty good deal. I would actually buy this if it comes to test one more time. I would buy it. If this fails, I can see this coming to test around the 1276 price, which is about the high of this candle, or maybe even the 1210 price. And so, yeah, we'll leave that one at that. The next one we're looking at is PSTH. Since Pershing Square Tontine Holdings, this is Bill Ackman's SPAC that's rumored to merge with Stripe. This one, I would get a really strong buy signal around here, around 28. Let's say come Monday, you see it down 5% in the day, and it's around 5% at 30 is about $30.50. Let's say it's around 28 and change, like around here. I would consider possibly letting it run down to maybe around 28-ish and change. Maybe to bounce off the 50 moving average, maybe even a little higher, and you can go for a long position. This SPAC is a little different though, because this SPAC actually opened up at $20. They didn't open up at $10. So let's say you buy at 28, right? Your max risk is about $8, but you know, you're looking to make about, well, you know, $6, which isn't a good ratio. But if you're actually long on Stripe, you know, this would be a good entry point, considering that this is still on an uptrend. And one thing to note is that it's actually been trading. It's actually been trading well above the 20 moving average. And the one time that it actually like did break through, the next day, as soon as it gapped below, it pretty much just dumped. But it was actually captured by the 50. So this 50 will be support if it comes. But if it breaks through, then this will be resistance. So then this can pretty much be your range for the swing. The next one that I have is FedEx. I called this one out about 2 weeks ago. It was on one of these days where it was about, I don't quite remember, but I said if it comes to test the 200 EMA, take the play. And the reason is because this has been support various times within the past 3 years. I don't think I have a longer time frame, but yeah, this one, I can see this maybe in about 2 to 3 weeks. You know, if it chops again down to this price, this 230, this 200 EMA will move up around 235. And the fact that this will support here, the fact that it will support here, and the fact that that's where going to be the 200 is going to be at, you know, very strong signal. Keep an eye on that one. FUBO is another very strong momentum stock. This one has just been, you know, roaring all over the place. it's at the 20 moving average. It's within its channel. And this one has a pretty sizable short float. So this one on its move ups, you can expect this to squeeze very quickly. However, right now it's below its 20 EMA. If come tomorrow you see a gap below, like, I'm sorry, if come Monday you see a gap below 4160 and you see a red day, this would I would strongly buy this at 38 with shares, because again, look, this is February 19th and this is December. So it's taken about 2 months and it's still been swinging. And this could very much like swing until it starts getting flat before it makes its next big leg up. But a 38 price would be a very good entry point. But if that fails, then we can see, a dump. What I would do here is I would buy at 38. I would risk about maybe to about 29, $9. But then I would look to get out maybe 51, 54. I would look to profit maybe $13. So 13 to 9, it's about a 1.5 to 1 reward to risk. It's still a pretty good deal. Now, one of my favorite pharmaceuticals is Aurinia. I've actually been covering this one in my YouTube channel, for the past couple weeks. And one thing about this is that it got its drug approval right on this day. It saw a huge volume spike, and then you've been seeing subsequent selling, up with actually declining volume. Now on your green days, you did see a small uptick in volume. However, the reason it wasn't able to keep running up was because the SPY was having like a really shaky days on some of these days. So it actually sent this stock down. But one thing about this is that it found some support at the 20 EMA. It stopped here the next day. It sold off and it closed at it. And the following day, it actually bounced above it, right? Now, on this day, it closed on it. The next day, it opened at it, it dumped. But on the 50 EMA, it found support, right? And then, the next day, it opened here, closed here, and it's pretty much above it now. So right now, it's good, right? The only problem is that this has earnings on Wednesday, and this is one of those stocks that has a huge growth potential for the upcoming years. So I'm actually holding it on to a pretty sizable position for the long term. But if you're looking to get in, maybe getting in around the 1580 range would be a good price. If you're looking to swing this, getting in around 1580, or even if it comes down all the way to like 1530, and then you can try getting out maybe like around 1670. So it's about a 70 cent to assuming wherever you get in, maybe to about a 60 cent risk. Honestly, I wouldn't swing this. I would just hold this long term, but I had on the list because it was requested. DM, another request. So it's actually below its 20 EMA. This is not a good sign. However, it might find support here before it makes a turnaround and goes above the 20 moving average. I looked at it on Seeking Alpha, and it looks like it has pretty good outlook. So this might be something you might want to find to hold for long term. A stronger position that I would probably buy at would probably be around the 50 moving average, around 23. But if it doesn't break, if it breaks that, or if it comes to the 50 moving average, maybe between 22 and 23 would be a decent buying opportunity. And so moving on to the next one, Blink. Blink has just been on a tear for the past couple months. Right now, as it stands, Blink is a pretty good buy, around 43, around 42. And the reason I would actually say that you can even get in as early as Monday, no matter where the price is because let's say you get in at 45. If you risk, I would put my max risk of around 42. You can risk $4, but you can look to make anywhere between 10 and $15. Even as high as maybe, even going to test maybe all-time highs. And that's a pretty good reward to risk ratio. because I do find some pretty good support here. So even if you buy, you know, maybe not at the exact price, you still have, you still have some room to lose for a potentially huge gain. And C4 Therapeutics, I don't really know much about them except that they're making a very nice, bullish uptrend. I would maybe look to buy around this support, which is around 4105. It's around the 20 moving average. What it can probably do on one of these days is it'll gap here, it'll come to test. It might break below this, and then it might catch some buys at 4102, maybe 41, and then before it makes a reversal higher, it'll close above the 20 moving average, and then continue moving higher. I'd definitely be looking to buy around 41. And the last one for the night is Bio Nanogenetics. This one has been on a freaking tear, especially the past 2 months. As of right now, I don't know enough about this company to hold long term, but I would play this if it does come to maybe the 1265 price, because it was resistance here, and once it broke through, pretty much ran higher until here where it acted as support, right? And so it's also been trading within the support channel, on the support line. And within the next couple of days, this support line and this teal line that I put are going to intersect, as well as this 20 moving average, this 20 EMA. And that's going to create a very strong buy and support signal. My only concern is that, this has been running, red hot. If you look at its RSI, it's been close to overbought territory for quite some time now. I wouldn't be surprised if you get a correction, and if it breaks through, what I would do here is I would try maybe buying a rec around 1272. I would risk maybe, assuming the moving averages catch up and so does this red line, I would risk maybe below, maybe around this 1107. So I'd risk about $1.50. But I would definitely be looking to make about $3 or so, on the next move up higher. And that's about it. One last thing I am going to review though is the SPY. And that's because SPY a lot of time will determine how the market is going to unfold. The S&P 500 as of recently has made, a very, it's made a bull flag where it's been pretty much running up, and it's consolidated for about 2 weeks now. It's about 10 candles. And until it can break the highs of 394, it's pretty much just going to be here. And what happens a lot of times with the bull flag is that sometimes it just runs sideways because it needs time for the, the moving averages to catch up before it can bounce and, continue making its next leg up. So you don't want to buy a bounce, at the same time that the S&P 500 is dumping. That's usually going to be, a very bad result. And that's going to be pretty much it for now. If you have any questions, just feel free to drop a comment or, shoot me a message, and, I'll catch you guys in the next one.